What's good, YouTube? Some days when we're trading, it feels like this. And other days, it got me like, and that's why in this video, I want to show you how you can process all of those emotions, because the reality is, in trading, you're never gonna stop losing trades. And I felt extremely inspired to make this video today because of the turn of events that we had trading on this Friday on Valentine's Day, in which we had a trade that basically was at entry and very close to our stop loss about 3 different times. We ended up hitting stop and then running straight to our targets. And I know that with 7 years almost of trading experience, if I'm feeling those emotions, then all of the brand new students and people who are maybe, you know, newbies in the industry are definitely feeling it today. So taking a look at today's trade, we ended up calling this out to the private mentorship as a signal. We were looking for this buy opportunity. I'll show you on the charts, essentially, for those who know my strategy, we're looking for breakouts or fake outs of this red boxed area. We saw that during London session, we got a fake above, ended up dropping, another fake of the low, and coming back up. Typically, whenever we get a fake out a couple of different times, especially in the same area, it means eventually we're gonna end up breaking through. And so that was my thought process for sending out this trade. But I want you to see this BS. I want you to see how this trade ended up playing out, because we initially entered here, went slightly in profit, ended up getting some drawdown, recovering back to entry. At this point, I'm like, okay, we should be good. And then we got very close to stop loss. And at that point, I was like, well, we're going to take an L. It is what it is. And we got back above entry into even more profit. And then we ended up coming all the way back down, almost hitting stops again, coming back to entry, sitting around, and then eventually tapping out. And this is the thing about trading that, you know, you have to understand, is that emotions are going to come into play when you start seeing yourself in profit and back in drawdown. But this is the most frustrating thing as a trader, is when you get tapped out, hitting your stop loss, and then right after, we end up flying back into profits. We would have hit multiple take profit levels with this trade the way we ended up for the day. Now, it wasn't really a huge win necessarily, but it still was some profit that not just myself, but thousands of people taking my alerts would have been able to also secure. But unfortunately, we got tagged out and then ran into profit. And, you know, obviously, some people are going to be upset about the loss. Obviously, for myself too, it was something that, you know, if it wasn't for the fact that I had 7 years of experience with trading, I would definitely be very, very triggered in this type of situation. And the thing that I tell people is that ultimately, this is just one trade. And sometimes we go straight to stop loss. Sometimes we kind of see it struggle, look like we're going to make a win here, and then it ends up hitting stop. And then sometimes we just win trades, right? But at the end of the day, it's math, right? We're either going to take a loss or we're going to take a W. Now, even though these type of losses really hurt, I want to show you a snapshot of what the entire week looked like. Because, for example, all of my students, even though we took a gut-wrenching type of loss to end the week right here, for the week, we were definitely profitable. In fact, my wife actually started a brand new prop firm challenge. She is in phase 1 of a 10K account and currently up 2% almost on her challenge, simply from following the Liberty trading system that I've created. And that was the fact that, again, we took some losses like this, and that she didn't even really allow some of the trades to fully hit their targets. So it just goes to show you that you don't need to win every single trade. And we can even have frustrating losses like this, and you can still be profitable if we look at something like the entire week, entire month. And speaking of funded accounts, I want to thank the sponsors of today's video, TradexMastery, for being our go-to prop firm of choice to make sure that our students are able to trade freely and to be able to receive payouts with no issues. We've been rocking with Tradex all year long, and we just dropped a crazy promo for Valentine's Day where you guys can get up to 50% off all funded challenges up until February 16th. So make sure that you guys grab your funded accounts ASAP for a great price, because we all know that the blueprint for success in this industry is to have proper capital and proper risk so you can trade smarter, not harder. Now, I want to take a second here to really show a couple of valuable lessons from not just this trade, but really this entire trading week. And so we're going to look from Sunday to Friday, all of the different opportunities that we ended up taking. So here's a snapshot of all of the different signals that we sent out this week. And I want to break down 3 valuable lessons here, which number 1 is following your trading plan and your strategy, which we already see we broke on Sunday. So I'm going to start with that trade. The second thing, the power of risk to reward being in your favor. And then ultimately is understanding that one specific trading day doesn't define your results. It's all about zooming out and looking at things from a weekly and even monthly perspective. Now, starting off with Sunday, we already had a mistake. And there's something called normal planned losses in your trading system. And then there's really errors or bad judgment calls that are the ones that really hurt you and your results, to be honest with y'all, because this was a trade that was on Super Bowl Sunday. So my focus level, my attention maybe wasn't 100% there, and you shouldn't really trade in that type of state of mind. And not just that, but my trading plan has always been to trade during New York session, not Sunday evenings. And I definitely paid for it here with this trade. The whole idea was that eventually we were going to come back, fill in all of these fair value gaps and tap into this area of demand from this big wick that we see here. And eventually the market did end up gravitating towards those targets, but for the time being, I jumped the gun on this day, was not following my specific strategy, and ended up taking a first loss of the week. In hindsight, if I would have just waited for my window during New York session, we'd see that we were breaking the high of the range here, could have gone in for some longs and ended up cashing out profits for the day. Instead, ended up making a bad judgment call here of jumping in, breaking my trading plan, and ultimately again starting the week off with a loss. Heading into Tuesday's trading day, got things back in line. Ended up going for a reversal model style trade here. We saw that at 9:30 New York Stock Exchange opening time, we got a big rally to the upside. I figured, hey, we're gonna come back, fill in this fair value gap here at some point. We just waited for the price to start crossing back below the high of the range right here. Ended up going for some shorts, bagging a 2% win. So that was a nice recovery of the day prior, and again showing us why we want to follow our trading plan and strategy. And take into account the risk to reward is really helping us out here, because a 2% gainer eliminates that minus 1% loss that we had here, putting us back in profit to start our Wednesday trading day. So Wednesday comes around, we see that we had CPI news right here on Forex Factory, 8:30 a.m. Eastern. Did not participate in any of the original move, but with patience, we know that the market's gonna give us more opportunities. Later in the day, we ended up progressing back into the range where I ended up going for longs, just continuing the bullish market structure that we were creating heading into it, resulting in another win for a Wednesday trading day. Now, Thursday was basically a repetition of what happened the day prior. We came below the range during London session, ended up recovering and shifting structure back bullish heading into New York session. Again, just like Tuesday, ended up taking some long positions. This was by far the nicest trade of the week. And that brings us to Friday, where again, we just broke down, where the market decided to just run our stop and then push into profit. And you see this loss compared to the loss that we had on Sunday evening were 2 completely different types of losses, because again, this loss on Sunday was not following the strategy, not part of the trading plan. That is an unforced error. When it comes to Friday's trading day, we were in alignment with the strategy. We waited for our confirmations. It just wasn't enough of a stop loss size to hold us here. But again, those losses are planned. I understand that with any trading strategy or system, we have to be willing to pay the price to play the game. And that means that we're going to hit stop loss sometimes on our judgment calls. Now, the issue is emotions get really triggered for a lot of traders in 2 different situations. Number 1, where they take a very slight loss and then end up shooting into profit. That can cause somebody to be like, man, I need to change my stop loss size. I need to start using bigger stop losses. I need to stop using stop losses. All different types of ideas that start to run through your head. But here's my thing. Zoom out. Let's look at the entire week. If we've been following the same method every single day, and we see that we had 3 days of the week where we were profitable, this was the one and only trade that really was a loss for the whole week. Again, Sundays was completely on me. making a bad judgment call. But if we follow the system, if we follow the strategy the way it's supposed to be, we had 3 wins and 1 loss. So even if you're just securing 1%, 1%, 1%, that's 3% profit minus the 1% loss here for a total of 2% profit for the week. And that's just assuming that you only closed at 1-to-1 risk to reward ratio on all these setups. Again, we saw on Tuesday go for 2%. We saw on Wednesday go for over 2%. And then on Thursday, we ran for a full 4%. So having a 1- loss right here is really not a big deal. But again, keep in mind, the biggest thing is eliminating taking impulsive trades, eliminating making errors in your judgment, because these are the trades that really eat away at your P&L and cause you to have setbacks in your performance because of discipline, lack of focus, things of that nature. And so even with all the years of experience that I have in the game, I can still, in the moment see an opportunity, and it may not be fully 100% according with my strategy, and I just decide, you know what, I'm willing to take it. It doesn't work out. And that's exactly why we even form systems, strategies, is to prevent us from self-sabotage. So I want you to get it in your head that you can't stop losing trades. A losing trade is going to be part of any strategy, any system. You have to be willing to pay the price in a form of a stop loss in order to have your take profits get hit. So if you're struggling with the emotions of trading, I think you just need to zoom out and start to really review your trades on a weekly basis, right? If it's a Friday, a Saturday, whatever the case is, actually document your wins, your losses, go back and see, why that trade won, maybe why that trade lost, and understand that, there's this saying that people love to say in trading, which is, oh, it's not a loss, it's a lesson. But I want to tell you something. It's only really going to be a lesson if you broke your trading plan. If you did something you weren't supposed to do, example, like Sunday's trade. But something like Friday, there's really no lesson to be learned except you have to take losses from time to time, right? There's nothing that we did wrong or that we need to change just because you lose a trade. That's not the way it goes, guys. So if you have a system that has good R to R, meaning your winners are bigger than your losers, and you have very specific rules and criteria for why you're getting into a trade and how you manage that trade, ultimately you should be profitable. If you're not, it's because you're just not executing your system properly. You are not, listening to the rules that you have set in place for yourself. And that's why you will always hear that trading is 80% psychology, 20% technical analysis, marking up charts, executing, right? Because at the end of the day, if you do things like revenge trade, if you over trade, if you end up changing your lot sizes over and over, just because you want to get back at the market, or you have things like hesitation or fear really stop you from holding trades or taking these trades in the first place, it's you that's got to work on you. So with that said, hope you guys got some massive value from today's video. Please make sure to like, comment, subscribe, and turn on those post notifications so you never miss any future videos. And as always, let's run it up.